What is happening today, traders? We have some good news coming to the markets. Finally, in what feels like forever, we have a Federal Reserve interest rate cut by 25 basis points, guys. Now, this is very, very bullish for the macro markets, right? And that eventually will affect our lovable stocks, AMC, GameStop, Neo, crypto, right? Mara, all those good stocks. But I'm expecting a little bit of a lag for our individual stocks. But you can see here on the macro, right, IWM slicing through its all-time high, going up to 256.57 with the all-time high today, and a big boost in volume. And that's what you want to see with these breakthroughs, as we've had every single time you've gone to make another all-time high. We covered this in many other videos, but this is your flat top resistance in IWM. You slice through, you gap up, right? Volume increase, and then you're off to the races. So this is exactly what we're watching for a kind of mock-up of 2021. We want these rates to come down, and we want the liquidity to go back in to those risk-on assets, guys. We got to get risk on. Come on. But I wanted to go over some news before that. So we talk about the 25 basis point cut. Now, Jerome Powell was relatively hawkish, actually, in this interview, saying things as though as they're going to wait for further economic clarity, further economic data. And we know how he is, right? But it seems like he was a lot more hesitant to continue cutting in January and February. So we're just going to have to wait and see. I'm assuming the economic data is going to come back and continue to come back relatively shady. But before we get into the charts, guys, I just want to go over the most recent GME earnings because they were good, in my opinion. You go over third quarter fiscal year 25 earnings, key highlights. So this is from Grok, right? Net sales revenue. Sales or revenue were down year over year, but that is not by any means surprising considering they are closing the underperforming locations and then expanding their collectibles market, as you'll see a little bit later in here. You can see earnings per share, 24 cents, beat the estimates of 20 cents per share, which is beautiful. That's absolutely crispy. And I was seeing on Robinhood 18 cents per share, so I'm not sure where they're getting 20 from, but regardless, right, a beat is a beat. So I'm very grateful. I'm very thankful that GameStop has been able to control the downside while also in attempt trying to expand the upside. A little bit of work there for Ryan Cohen still. Operating income, $41.3 million, improved from a $33 million loss from the prior year. That is beautiful, guys, because not only are they pulling just a natural profit, right? And not only is that the case, right? We are officially a full year of profit, guys. Year and a half now, 6 earnings in a row for GameStop. But you're also seeing here the 6th earnings beat in a row, which is insane. That simply does not happen. It very rarely is the case. So it gets me jacked. It gets me bullish for the future of the company. But strong growth in collectibles segment, up 49% year over year. Cash and marketable securities at $8.8 billion, guys. Bitcoin holdings valued a little bit less, as we know Bitcoin drew back. But the results showed improvement in profitability through cost discipline despite lower sales, with the stock negatively reacting. So that's the big thing, right? The stock is down 5 to 6% initially. And I think that is just to be completely honest, I think it's an attack on GameStop, right? I mean, you have some pretty bang up, insane earnings. When you take into account your top line sales were down, but you still absolutely dwarfed your previous year's profits. So that means they have scaled back the unnecessary fat so far on this business that the legacy business is now earning profit. That's insane. And that's before they do any kinds of expansion, any crazy stuff, right? But what I wanted to talk about was our thesis on GameStop. Our thesis on GameStop is one of I do believe you're going to find a rejection here, make a bullishly divergent low somewhere along the bottom of this trend line, and finish this macro falling wedge. Now, we had talked about this in many different videos that I think you're going to find this previous uptrend as new resistance, and that's exactly what you did here. You tapped your head right here, you blipped above it during earnings, and then you see that rejection candle. And to give you guys a little bit more clarity, this was your micro setup we called yesterday. You broke out of this falling wedge. To give you guys the full story, you shot down in this falling wedge, break, right? You snap out of the falling wedge, you bump your head against this previous uptrend of support, its new resistance, and you created this rising wedge of sorts. It was very interesting. I was skeptical on calling it a rising wedge, but theoretically the profit target, if you were to go short, which I don't do, but that profit target for the falling wedge from the breakdown took you almost to the cent, guys, almost to the penny. So you did a couple different things, right? You filled your gap fill sitting at 21.83, and that's a beautiful thing. We've had that drawn up. That line remained there from yesterday. Now you have two options here. You can A, confirm this as a shoulder, head, right shoulder. It's a little sloppy, but it's there, right? In which you would then look to find a bounce off of this gap fill and take the head to neckline profit target, stick that on top of the neckline, and boom, right? You get a beautiful rebound up to that $28 point of control, guys, which we found using the volume range profile, or the VRVP for those who are interested. Finding that bounce would be tremendously bullish, and I can't understate that. You would be continuing your bullish trajectory off of this bottom and confirming your breakout. But I don't think we're there yet, guys. I do not think we're there yet, unless, right, what we spoke about earlier, unless IWM hitting all-time highs can catapult us and give us a little bit more oomph that we need to break free, because this is a big deal. Nobody's talking about this, but this is a very, very big thing happening right now. As you're actually overperforming the S&P 500. It is not often that occurs where IWM is overperforming your S&P, except for risk on markets. So I think we're finally risk on, baby. Rates are coming down, and you have the neckline officially broken on IWM, which genuinely gets me jacked. That gets me so excited for the future. But not to take away from GME, right? I do believe you'll find some kind of bounce. Whether or not it holds up as your head and shoulders, I'm not sure, but you do have the setup. The setup is there, right? Now, today, you made a gap. So funny, right? In filling the gap, you made another gap. So I would not be surprised to see if this is the falling wedge that we're talking about, right? I would not be surprised to see a dead cat bounce here, where market makers think, oh my goodness, we're coming back. Oh, and we reject. Double top. And then you go to find that bullishly divergent low in which you could accumulate some crazy cheap shares at premium opportunities. Not financial advice, right? But I'm watching for that pretty heavily. Let's see. You did do a couple things that further feed in to why I think that you could be finding that bullishly divergent low. The first thing that you did was, right, you sliced back beneath your weekly RSI band. Now, traditionally, this has been bearish. This was your last slice down 8.2%. And then you saw that trend reversal continue. You had another one back here. You sliced through. You saw a 25% drop. Now, those are just your two last examples within the falling wedge. I don't think it would be that harsh because you truthfully only have 10% to the bottom here. Now, if this is not that inverse head and shoulders, I do expect you to come down somewhere along the bottom of this trend line and then to bounce pretty dang hard. Because what you would be doing, hopefully, right, you want to see that lower low in price, but that higher low on the RSI. And what that's going to do or tell me is this consolidation period is coming to an end. Same way that I think this consolidation period is coming to an end. I think you can only chop in this box for so long, guys, before you find your new price discovery. And when you zoom out on GME's chart, you can see currently you are at the same spot you were in 2022. Go figure, right? The stock has completely flipped the fundamentals and the short thesis that we'll get to in just 1 second, while raising $10 billion of cash on hand and liquid assets, guys. You can't make that up. That's silly. That is a silly evaluation in which your cash and market cap are almost a 1-to-1. If not, they are, right? So I'm watching the RSI. I'm also watching on the weekly, guys. On the weekly time frame, your weekly MACD has just pulled away. So if you do not see that inverse head and shoulders, which I hope we do, I just don't know if it's likely, right? But if you don't see that inverse head and shoulders, you're going to see this begin to peel back, and you're going to miss that opportunity of the weekly MACD cross, which you had and then you lost, right? So that's huge. That's going to be so critical if you cannot hold this $22 level, right? You're currently sitting after hours 22.07. So it's going to be very important that you use this level to launch. But I wanted to go into the short interest a little bit because why else are we here, right? We're here for a short squeeze. That is our thesis. That is the sentiment of these two stocks, AMC and GameStop. You can see the recent official short interest for AMC as early as November, December 2025, approximately 48.7 million shares sold short. So that's around 14 to 17%. That is genuinely really high from what it's been in the last year. That's towards the top. And then you have 16% to 17% of the float shorted on GME. Take that into account that these two stocks short thesis genuinely is dying, especially for GameStop. I do believe your short thesis is dead, considering the macro fundamentals of the stock. So take that with a grain of salt, right? We're waiting for a short squeeze, but truthfully, when you look at these numbers, right, you see days to cover exceeding 10 based on average volume. That's insane. Genuinely, that is on the higher end as well. And if you were to find some kind of squeeze here, up to 40, up to 70, this would be the way it would go down, in my opinion, is you see this falling wedge formation, right? Roaring Kitty tweets. Maybe Michael Burry gives his analysis on the GME story, right? Does a little bit more due diligence, right? Maybe something like that. I do believe that this range is coming to an end, and that's why I'm saying this is, long story short, I think this is due for a bounce out of this range. Otherwise, if you don't hold 18, guys, things begin to get very scary and very hairy. You go down to 15, and then you go for a potential double bottom at $9 to $11. We know that the stock is just not there. It's not, right? That would not make sense whatsoever for the valuation of the company. So that's what we're watching for. I do believe in this falling wedge. I will be absolutely smacking that ask or that buy button when you get down here, right? So that's very exciting. I'm excited for the opportunity to run this thing absolutely ballistic, but the opportunity is still there for an inverse head and shoulder. I just don't think it's as exciting as the falling wedge. So that's GameStop, right? GameStop had some absolute smash earnings. But let's talk about AMC now, right? AMC still trading within this falling wedge pattern, and not a lot has changed, but there is a development on the chart in terms of the price, right? So you pull up the falling wedge, you're literally hanging on by a thread. You're hanging on, closing right at the bottom, wicking off of it just barely at your low 220, your close of 221. This is on the weekly time frame, right? What I think is possible here is that you come down, you make one more touch of bullish divergence in which the stock makes a lower low just barely, but the RSI taps and makes a higher low just barely. And then you find your shoot or your moonshot, right, out of this range. Inevitably, that is what I believe is going to happen. I do believe with the bullishness of the rate cuts, with the bullishness of IWM at all-time highs, guys, I don't think it's likely that these stocks remain deflated or depressed as long as they have for very long. But there is always that scenario, right, with the share dilution, the freaking float doubling in size, that you do get some kind of bear case thesis in which, if I go to the daily here, maybe, right, you could get this descending triangle or ascending triangle, in which you find this higher low, lower high, higher low, and then you dump. And theoretically, that target is your previous move down to the breakdown, right? That takes you right about 140. And once you get there, it is, in my opinion, that you would come all the way down and you would tap your previous low trend line, right? This was off IPO. This was off 2020. This was off 2024. And this is off 2026, guys. There's a very real scenario in which you see this extended move down all the way down to 120 to 121 on AMC. Now, that would be terrible. Nobody wants that, right? But the value in which you would be picking up at that point, in my opinion, would be insane. Now, this has not happened yet. We haven't even seen the signs of it happening because you don't have an ascending triangle formation yet. And you still are holding your RSI weekly bullishly divergent trend line. So that, until this plays out, guys, I am just waiting with my hands up on AMC, to be honest, because the explosive moves that were predicated off of your previous weekly RSI divs, guys, has been absolutely insane. And I wish, just looking back in time, right, as an AMC trader, I have loved this community. I have been a part of all the big run-ups and all the big rundowns, and I felt the emotions that came with it. But I wish I had the intelligence and the trading experience to identify these bullish divs when they happen back here, because I could have made so much more money, right? And just identifying these and how they've happened in the stock, right? I'll give an example. You had a bullish div here because the price went down, price went up on the RSI. Take that profit, 168%. Happened again here. You made a lower low in price, higher low in the RSI. Price went up 165. Those are just examples. It also happened in your previous all-time low. And the fact that we would expect anything different here, I do expect this falling wedge at some point for some reason to pop. Now, whether or not that is because of the Adam Aaron news that he's going to drop on us in January or February, who knows, right? He was saying during that video, which I linked in my last video, that this would be the biggest announcement if he could pull it off in AMC's history. So I'm genuinely fascinated to see what he has in store. Hopefully it's not massive dilution, right? Because so often is that the case, but things do not trade down forever. And you are in a bullish reversal pattern. Typically, these break up. You have weekly bullish div, guys. These are very positive signs for the stock price, and we're just literally waiting. And I know it feels agonizing because we've waited for 819 days since your AMC ape split. But I do truthfully believe that you're going to see that mark up. And if we do, right, there's multiple different locations to watch for resistance. The first one being your mother of all downtrends. And what's exciting to me on AMC is this macro thesis that you're going to bust back into this channel that you held all the way back from 2021. This channel that brought you to the highs, it brought you to the lows, and then it brought you back to the highs, brought you back to the lows, until inevitably you lost it. And then you came all the way down, you tested your all-time downtrend, and then you retested it, rejected, made a new low, right? And the way that I see this is I do believe you're going to break through this falling wedge. I think it's going to get you back in to this downtrend, to this channel, right? And once you're back in it, there's only so much trading you can do before you inevitably break free. You unleash this thing from its chains, and you begin to feel a little bit more of the fun, right? The squeeziness. I don't think that that's lost from AMC yet, regardless of the share size or the float size. One thing I wanted to show you guys was VRVP. Now, we talk about the VRVP many different times on many different stocks. But what's important here is your point of control on AMC sits the bottom of it, right? Where you see your shelf of volume in which you've traded the most shares sits at a very, very, very crucial location of 535. So what I think is going to happen if you break this falling wedge is that you're going to come all the way back up. And this would be sometime of April of 2026 if this trend line matches with your point of control. You're going to come back up to 556 or 540, and you are going to absolutely get obliterated because you're testing your highest point of resistance on the stock chart according to your volume profile. Now, once that happens, you'll find a lower or a higher low, and then the rest is history, right? Because that would break, or another retest of 560 would break that point of control, and then you're off to the races. And once you do that on AMC, if you're able to have that bullish strength, right? Our levels marked for this squeeze or this markup for the next run would be $13, your gap fill from the initial move down, $19, another gap fill, and then $43. Now, above the $43, guys, literally all hands are off the table, and I have no idea where to go past that. But that is what I'm betting on for AMC for your long-term recovery, because this is a recovery play on movie theaters. It's a risky one at that, but this is a recovery play on movie theaters, and I do believe you're going to see that price range eventually, right? Whether it takes 2, 3, 5 years, I do think you're going to fill this gap because this gap exists on the weekly freaking time frame, guys. So whatever AMC's got to do to get up there, I do believe it's going to happen. Whether it's a straight shot like it always has been in the past, or whether it's a more fundamentally slow ground markup, right? I mean, look at what HYMC is doing right now. Unrelated. But HYMC, HYMC, not to get a controversial topic. Oh my goodness, this thing is on an absolute rip. But this thing came from that slow melt up, right? And we had this thing drawn out, higher high, higher low, higher high, higher low, higher high, higher low, blah, 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 until you just ended up absolutely full sending on this thing. And I think that's your top right there, to be honest, smashing the 200-day weekly EMA like that. But fascinating to watch, genuinely. So something I'm watching on AMC, the last thing, and then we'll get to our outro. Something I'm watching on AMC is just like HYMC had on the quarterly chart. You had your quarterly MACD flip, just like that, right? And once you had it, that marked your bottom, and you started your markup phase, 46%, 98%, 88%, right? And these are quarterly candles. That's slow growth. Now, what I'm watching genuinely on AMC is this is the closest your quarterly MACD has come to crossing up since March of 2021, guys. And what happened in March of 2021? Well, you saw a 381% run And not to say that it's going to happen just that way, right? Because nothing ever repeats, but it does often rhyme. And if you see that markup, guys, genuinely, I'm just so excited to see this thing. And we've been talking about it since day one. For my awareness, I might be the only one covering it, but things like this affect the macro significantly when you get news, right? You got news down here, cash on hand. I don't remember what you did, but you did something, right? Retail flooded in. I think you're going to have some kind of retail revolution or retail mania just like you did before. And there's so many different catalysts, guys. There's rate cuts. Trump literally just came out yesterday saying the next Fed is going to have to cut rates if he's going to be in position, which is a little bit of a conflict of interest, right? But I love it. Cut those freaking rates. You also have the $2,000 possible stimulus, which in all means was probably a huge contribution to this, right? Getting retail the money to contribute to the stock market, to stick one on the bigwigs, right? So I am rooting for this community every step of the way, but I'll say it again. I haven't said this in a while. The lessons that we learned in this markdown phase were a whole lot valuable than the stock that we held. So remember that, guys. IWM to the freaking moon, GME, AMC to the freaking moon. God bless each and every single one of you guys. And remember, the best is yet to come. Peace. Woo. And subscribe.